I'm Matthew Holt. I'm now in the, there's now a well-established tradition where they give me the venture capital panel. I spend most of my life begging venture capitalists to talk to companies and get lots and lots of emails back saying, go away. Occasionally you get nice emails saying, no, come talk to us. So we have a lineup of VCs and investors here on this panel, and we're going to talk about investing. There is also what is it called? QR codes. When you're old like me, you forget words. There's probably a diagnosis test for that somewhere that one of you is building. And if you scan that, hopefully, if this works, there should be a quiz question, which will be very relevant to this panel. And we'll ask them. All right. So we're just going to go down the row, and I'm going to quickly introduce the panelists. And they're going to answer the obvious question, which is, what have they done so far? So first up is Ellen Herlacher. She is from LRV Health. And Ellen, you guys have put some money into some mental health companies, so tell us a bit about who they are.
Sure. So we've done 3 explicit deals in behavioral health, and then one or 2 that I think touch the category. The first was a company called Silver Cloud, which is a digital CBT company that exited to Amwell a couple years ago. The second is a company called Huddle Up, used to be called .com Therapy. It's focused on pediatric speech, occupational, behavioral, focused on the education market, selling into IEP programs. And the third is Cortica Care, which is a whole child care model for autism. Another company that I'd like to just call out is Diana Health, which is a reimagined women's health company that does integrate behavioral health into the OBGYN clinic.
And then for LRV, and I'll ask all of you the same question, what kind of check do you like to write? What kind of check? I mean, color one with a pretty background. What size of check do you like to write in what kind of a round?
So we kind of participate up and down the venture category. So we'll do everything from kind of first check-in and seed stage to kind of early growth. So the size of the check will depend on the size and stage of the round. But we typically lead or co-lead, but we don't have a problem participating as a kind of strategic member of a syndicate too.
All right, so anybody in the audience can ask you for any amount of money. I just heard that. So, this is your chance to limit it a bit. All right. Okay, so next up is Daisy Wolf. Daisy is from the almost unknown venture capital company called Andreessen Horowitz. I'm teasing. Which, as we just discussed earlier, was hedging its bets between the 2 most famous principals over the election that just happened. Daisy, same question. You guys have done a lot of investment in a lot of companies up and down digital health and God knows what else. But pick a few in the mental health space that you have money in that you like.
Awesome. Thank you for having me, and thank you for filling this room. We have, I think 6 behavioral health investments, 4 of which are publicly announced, not public companies yet. We are in Headway, in the therapy space, Talkiatry, and the psychiatry space. We're in Willow Health and the crisis care space, Marker Learning, and learning disabilities, and then 2 more that will probably be announced in the coming months. So thank you.
All right, and same again with you. I know you guys go up and down the scale massively, but what do you think the most typical check size and round size you're in these days? I mean, some of them are pretty big. Psychiatry round was what, 125 million?
Yeah, we lead rounds, and our check sizes are 1 to 2 million to a couple hundred million.
Yeah, absolutely. That's Mark Andreessen has that in his couch, probably. Yeah.
Big range.
Right. Next up is Jenna Ciotti. Jenna is from Transformation Capital. I also spot her colleague Julie Murchison, who I've known incredibly long time, hiding in the corner there, so you can ask both of them for money. But Jenna, same question to you.
Yeah. Well, nice to see everyone. Transformation Capital, we're based out of Boston. I will start with the check size, and then I will hop into our portfolio of behavioral health companies. But we are largely Series B, Series C investors, but we can invest at the Series A, and then also sort of at the pre-IPO or later stage. We are very thematic, so we spend a lot of time going deep in areas that we're excited about as a sector-focused fund, and behavioral health has been one of those. So in our current portfolio, we have 3 companies that service the behavioral health space. One is called Grow Therapy. Probably saw their booth in the show floor. Grow is a really unique company that has effectively enabled independent therapists to stand up their own practice. but also to do so in serving patients across all product lines, so everything from Medicaid to Medicare Advantage. Their therapists can treat those patients. We've also invested in a company kind of on the other side of the spectrum than Grow Therapy, in a company called ThriveWorks, which is really a LifeStance competitor. So they have about 350 clinics across the U.S., do a mix of virtual and in-person talk therapy services, as well as psychiatry. And then our third partner company in the BH space is called Groups Recover Together, which is primarily focused on substance use disorder treatment for the Medicaid population. So a couple companies that we're really proud of. And check size-wise, like I said, Series B, Series C, which really means anywhere between $15 and $50 million investments in kind of growth stage companies.
Thanks so much, Jenna. And last and definitely not least, and the other owner of a Y chromosome on the stage, is Carmine. Carmine is the director, Carmine DeMaro is director of the One Mind Accelerator. So a little bit different than the rest of the crowd here. So tell us a little bit about One Mind and what you do.
Yes, thank you, Matt. So Accelerator, a little bit different. In terms of check size, we were doing $100K in each company. This year, we're changing it up a little bit. We're raising a fund that will invest in companies post-program. It'll still be somewhere within that range. So for us, obviously, like, capital is not the key driver of what we do. So for us, we're providing access to the payers, to the hospital systems, to large employers, researchers, scientists, clinical resources, and of course investors. And so we think those things are priceless. We're really excited about the group of companies that we've worked with. So we've done 21 companies. We only do mental health. I don't know if I could do all 21 off the top of my head right now, but I'll just go through some of the highlights. So of the 21 companies, they've raised $200 million altogether in the last 2 years since we started the program. One company, Function Health, just raised $56 million from Daisy just a few months ago. And they do basically a comprehensive blood test, and we're helping them to incorporate behavioral health biomarkers into that. We did a company called HoloBiome, which does gut microbiome, basically the gut-brain axis, developing probiotics, because your gut is actually your second brain, and so figuring out how that impacts things like depression and anxiety. We did a company called Vita Health, which I think is maybe in the room. They do suicidality care. They had raised $22 million just before coming into the program. Pangea Bio, developing drugs for schizophrenia. I could go on, but we do across the board pre-seed to Series A, and we just closed applications for our spring program that's coming up. But I've got the code if you want to submit a late application. So happy to be here. Thanks.
All right, fantastic. So you heard a range of different companies there, and I want to start with the sort of the what's hot or not question. You guys are all too young, but there used to be a website called Hot or Not. It was one of the first websites. It wasn't about mental health, although it probably caused some mental health challenges and was a precursor to some of the mental health challenges other social media companies are now causing. But there are obviously some very well-funded companies in this category. It's also, as a guy who's been hanging out in digital health far, far too long, it's the one category that I would say that has established itself as a separate delivery system, the venture-backed thing. We were hoping this was going to happen in many other areas, but instead most digital health companies are out there begging the incumbents for, a contract that may arrive in a year or 2 years or never. So this is an interesting area, and we'll talk about the output of it later, but for right now, what's hot? What are you looking at? I'll pick you on you, Daisy, because you made psychiatry is a relatively recent late investment in terms of the cycle of the big checks going into this area. So what else are you looking at? I'll pick on you for a start, and then we can go on the road.
Yeah, I think from my perspective, to be a little reductive about the waves we've seen in behavioral health, first, it's just been a category that has really outperformed other categories in digital health, and a lot of the investor value has accrued to mental health companies, and I don't know, there are feels like 5 or 10 that are valued at over $1 billion. And so the first wave of really successful companies were employer-focused, kind of the Lyra Springs of the world. Then we saw a wave that was focused on bringing therapists online with insurance coverage and connecting them to patients, and Grow and Headway. Then we saw a wave of SMI-focused mental health companies. And the way I would put it is, it feels like we're still kind of in like mental health 1.0, where everyone is kind of being given talk therapy and SSRIs, but we are moving into a world with lots of modalities and where people are going to have tons of options in terms of medicines and treatments and very focused models based on their condition. And so I think in terms of what's hot, we're seeing a lot of dedicated care models. And then the other thing is and so that's like SMI, the high end of the spectrum. And then tons in kind of the technology only camp where we're never going to kind of solve the supply and demand mismatch of mental health professionals and people who need help in our lifetimes. And we need creative solutions to this problem. And we've seen a lot of people go at it with a group therapy approach, and I think, that's great, and there's a role for that. And then we've seen over the years a whole lot of like kind of tech-focused, like texting bot solutions. And then with the advent of generative AI and kind of all these foundation models having APIs and coming online, we're seeing people who are building AI therapists. And it went very quickly from saying, like, who really wants to, like, chat with a bot to all of a sudden, like, you can talk on the phone to a therapist now who is not a real therapist, and you can tell. But we're probably 2 years out from not being able to tell if you're talking to a person or not. And so there are all sorts of, positive and negative things we'll have to figure out as a society. But I think on a whole, it's exciting and good given the number of people on this planet who need help. So,
yeah, I said something very similar last year in another session and got stuff thrown at me by a bunch of therapists on the stage. But looking at the supply and demand and the advance in AI, it seems to be that last category I think is particularly interesting. You mentioned groups, but I don't know, Jennifer, if you want to pick up on that or others. Who wants to dive in for what did Daisy not say? Not much.
Yeah, well, no, Daisy, you set the bar high and said a lot of really important things. I think one of the things I've been thinking a lot about as an investor, if you look at all the companies that are here, we're all solving really important problems. A lot of the focus has been around solving the access challenge, right? How do we ensure there's enough supply? There's a lot of creative ways to do that. AI is definitely an opportunity. But now how do we start to measure care? What's a way to better understand the performance of providers? How do payers then steer patients to the highest quality providers so we can better utilize our supply? And so I think measurement-based care is a really important area of the future where we're just really in the early innings of understanding what that looks like and how do we measure and objectively measure providers across networks, depending on whatever acuity or area of mental health that you're servicing. That's one area. And then the other area that I'm actually particularly interested in, largely that's driven by some regulatory changes, is autism. I think the gold standard of care for a very long time has been ABA. And increasingly, payers are grappling with how do they manage the increasing costs of ABA services. And so there's been a lot of innovation around care models that are doing things like play-based therapy for children with autism that require less utilization of services, lower costs, and perhaps enable better development of a child early on in their treatment program for autism. So I think that's a really interesting area to focus on, and we're starting to see some early-stage companies emerge in that category specifically.
There's been quite a lot going. There's a couple of big autism rounds that haven't necessarily been successful to this point, right? So you think there's a qualitative change in what's going on in that world?
So the Mental Health Parity 2.0 is effectively going to limit sort of the amount of utilization management that payers can do on things like autism services. And so taking a more holistic approach to the child is something that a lot of payers are focused on. And actually, Ellen's firm is in a company that does this called Cortica,
right.
That is really interesting and has had a lot of early success in this space.
And Carmen, you were about to dive in, so jump in. So.
I was, yeah. So I agree with everything that Daisy and Jenna said. Some things that I would add to that we're super interested in. We started off with a focus on SMI, really as kind of the, genesis being a super underserved area. I still think that's the case. I think especially, if you're going to be selling into payers, partnering with hospital systems and doing these things, it's very very hard to do, the next like growth therapy or like some kind of like general software or, treatment modality. Like you have to be going into like a subspecialty of some sort. And so I think SMI is going to be a huge area of opportunity in the next few years. And within that, I'm also really interested in Medicaid. Medicaid has really started to embrace some more innovative treatment modalities. We're working with some companies that are doing really good work around things like peer support, youth mental health. There's, some innovation happening around like SUD with Medicaid as well. And it's a space that I think is going to be really good for companies over the next few years. And then the third thing is just these deep science companies. I've met so many scientists over the last few months that are developing, new compounds for serious mental illness, or they're developing, different psychedelic compounds that, they don't have the trip, don't require supervision, but provide, supposedly all of the same benefits. And so we're talking to a handful of companies doing that as well. And so it's going to be interesting seeing kind of like the balance between these deep science, like we're developing a drug in a laboratory, versus like the more kind of like social determinants, like holistic sort of model of care. I think you really need to have both. And there's some cool companies in both of those buckets right now.
And just a commercial, please feel free to come in and spread around. There's not a lot of room left, but somehow they left. Anyway, and then if you get the chance, do fire your phone at that lower QR code there. I do have a poll question I would like you to all answer, and also to ask questions, or else I'll keep asking them, and my questions may not be as good as the rest of the crowd. All right, you.
Oh, we're still on the what's hot.
Yeah,
right?
we're still. I mean, is there anything left? Are you still?
Yeah, I mean, I think this group's done a great job of kind of covering a bunch of interesting categories. I think one of the things I think a lot about is, and maybe I'll just start with the problem statement, which is that the reimbursement, generally still is terrible. And so, so we think a lot about how companies can create value and get paid for it. And so we do gravitate toward companies like Cortica that have figured out a way to merge the behavioral and medical side of the house and then contract on the basis of a case rate. That starts to open up some really, not only some interesting economics, but some kind of ability to do more for the child. Other ways that we've seen this work is if something is like highly effective and time boxed and potentially curative, you start to see payers think about contracting in more creative, innovative ways. But that's the other thing we think about is, where these innovations actually start to create value for payers or providers, and where these folks start to kind of come to the table and contract in interesting ways.
Daisy, you're about to jump in, so do. No, you're not? Okay.
Agree.
You were giving me the hint, and then you would. So let's talk. There are a couple of things I want to get into. There's an obvious one. We had an election yesterday. The result may not please all of us. But it's going to make a difference, right? So it's highly likely now that we're going to see significant cuts to Medicaid, which has been an area of expansion for certainly mental health, and certainly some states have taken some of those Medicaid dollars and done a lot with it. That's been an area that several companies have tried to get into. Might change, we're not sure what's going to happen. Might change Medicare Advantage, might change payment rates, might change who knows what. What's the sense of, panel, do you think, it's early days, I understand, but what do you think, is any changes might come out of policy that are going to change the kind of things you're thinking about investing in?
Yeah, it's a great question. I do think it's too early. Who knows, what was a campaign promise of what's actually going to happen, post-election? I have no idea. I think Medicaid is a concern. As I mentioned, it's been expanding and really providing a lot of opportunities. And so I don't know, if there's going to be cuts there or not. Part of me thinks that, that won't really happen. Maybe I'm just being optimistic, but I'm hopeful that, people who know will keep that from happening, and we'll continue to see expansion within Medicaid, especially for the most vulnerable populations. And outside of Medicaid, generally for funding in mental health, I think there's a good amount of bipartisan support for a lot of this. There's the Mental Health Caucus in Congress, which is, comprised of both Democrats and Republicans. But it's I would be lying if I said that I truly knew, what was going to happen in the next 3 to 6 months.
Jenny, you about to dive in?
Agreed. I think Medicaid is certainly the one to be most concerned about. I would also just add that I think there are certainly potentially implications for minority communities like the LGBTQ plus community that may see access changes in states that maybe have already started to make changes even under the Biden administration. So I think that's an area that we have a portfolio company that serves the transgender space that we're obviously concerned about.
Yeah, I mean, there was some, frankly, I mean, living in California, you don't see many of these commercials, but there was, when you had a national football game or a baseball game or the World Series on, then you saw one or two commercials that were very brutal about that topic, and, the rhetoric is being heated up, and seem to be few guardrails, so there is that. Is there any opportunities, do you think, this creates that you'll look at for investment and say, okay, instead of in this space or that space, this kind of thing, this kind of mental health company might be more attractive now?
Could I maybe?
Please, dive in.
Well, I would like to add on to the prior question, and then answer your new question in my own way, if that's all right.
They're the same question,
yeah, it's
right?
like we're talking about politics anyway,
Yeah.
so I feel like you can answer whatever question you want. But
Of course. She's running for the House and the Senate next year.
But there's maybe just going back to the topic of kind of innovative payment models, maybe one glimmer of continuity that we've seen between the Trump and the Biden administrations was the CMMI group that's, I think, done some really interesting work around piloting, different types of payment models. And so I'm hopeful that that continues, because I do think that really is an unlock for taking really interesting, innovative models and then actually commercializing them in a way that's sustainable. So I think maybe that's just a glimmer of hope or continuity. And then maybe your second question is, as kind of one of the filters that we think about a lot is, as we think about companies, we do think about like, what are the implications of this company in a Republican administration? What are the implications of this company in a Democratic administration? So it is an important screen. It's not, we don't necessarily let the tail wag the dog, but I do think it's an important screen as we think about where we deploy capital.
Okay, so sort of bilingual mental health companies that also provide prison camp wire. Sorry, I have two Hispanic young adults who live with me, and I am kidding about this, but I'm deeply serious about how bad it is. Daisy.
I think I agree with all of you. I think what I'd add is neither campaign was a particularly policy-oriented campaign. I don't think we know what's coming in the next few months and years. I think there will be an administration of people who are looking to experts to inform decision, and so we all hopefully have can use our voices. And I think there are scary things that could happen with Medicaid and for transgender people and reproductive rights, and there's a whole host of unknowns. But I think it's on all of us in this room to figure out how we continue to get people access to care. And we've seen, tons of creative solutions coming out of the founder and entrepreneurial community over, many different kinds of administrations. And so I have faith in just the people in this room and at this conference that we will, figure out how to get mental health services to people who need them, because it's a life or death issue.
All right. I want to talk about that particular issue about how do you get people into mental health in a second, and where you see as a sort of growth area in that, and if there's an investment role for that. Before I do that, a few of you have voted on this poll, and a couple of you submitted questions, and I was very clever. I figure out how to open the question. That's a separate. But there's been a lot of discussion at this conference about a couple of things that I don't think I heard so much last year and didn't hear so much when Solomon was running it online. There was a lot, back 4 years ago, 3-4 years ago, when it started, about access, about the different types of tools, about AI and versus humans. Quite a lot here about sort of diagnostics and how do you get right people to the right treatment and what kind of diagnostic tools there are, and how that works. And then related to that is the idea of sort of accessing, allowing wider access. And I was in a session today with a company which, is working with the state of New Jersey. And I wish I could remember the name of the company. It's Derek Van Brunt's company. Somebody shouted out? Nobody? But, it's now being given to, and there was this suggestion yesterday, there was a session yesterday which Optum was discussing how they give them Supportive, which is a peer support group, to everybody in schools rather than just Optum members. So with an investment lens and with the massive demand we have for mental health and had since the pandemic, what are you thinking about in terms of how do you think about getting more access to more people, especially that sort of first part? And are there specialty companies that are going to be doing sort of just diagnosis or just reach out, or are there going to be some niches that emerge here that are going to be perhaps different than kind of the big players like the Tokatri or the Liras or the Springs or whomever?
Yeah, I can jump in on that one. So we've invested in and are looking at a lot of these kind of like diagnostic companies. On one end of the spectrum, we did a company called Dionysus Health, which can predict postpartum depression with 80% accuracy in the third trimester. And it's like a very science-heavy team. And so for a specialty area like that, like the potential value to healthcare providers and to the people who might actually end up with postpartum depression is obviously huge. So I like it in that kind of specialty context. We've also worked with some folks who are doing kind of like AI diagnostics, like multimodal, vocal and written kind of biomarkers to diagnose passively, depression, anxiety, PTSD, et cetera. I think that's becoming a more challenging space. I've seen companies that are doing it specifically for like pharma and clinical trials, and to me that's a lot more appealing because it's really, the ROI is much more evident there than it is in kind of a general provider use case. Curious to hear what you guys have seen.
Yeah, I guess what I would add to this point specifically is around what we're seeing in like the subacute part of mental health services. So these are folks who could benefit from coaching or even self-service apps like a Calm or Headspace that have been around for obviously a long time. But I think Ellen made a really good point earlier, which is the reimbursement needs to follow some of these solutions. So until we get to that point, I'm not optimistic about the opportunity around some of these subacute models that I think are delivering really tremendous value, especially to children and adolescents who can benefit from a text-based solution, a community of peers that are like them. But right now, it's really hard to commercialize those offerings in the current reimbursement ecosystem.
I would just say, like a real frustration of mine, just back to access, is I spent a couple years looking at collaborative care models, which I think are fantastic, and it basically is a nod to the fact that a wide swath of folks seek mental health care in the primary care setting, and like probably should be treated for their mental health in the primary care setting. And there was this kind of, at least in my mind, some real excitement around these collaborative care codes that should have been this fee-for-service unlock, where you can essentially treat mental and medical in a primary care setting. We have really, really struggled to invest in this space because, again, the reimbursement stinks. And so it just doesn't naturally fall into this venture-backable category. And so it's a space that I think, I get really excited about from the standpoint of the potential to kind of unlock a ton of access and take a lot of burden off primary care providers' plate, and also do a better job of considering behavioral health and how it influences other chronic conditions, but the reimbursement isn't there for us to kind of get really excited from a venture standpoint.
Don't worry, value-based care will be here any minute and fix it all. Yeah, I started doing healthcare in 1990. I'd been waiting for value-based care just to swoop in and save us all, and may not be coming. All right, now I'm going to ask a question that's related to the poll question. So I wrote a piece a little while ago called Digital Health, There Is No Exit. And my basic thesis is that you have a lot of what you might call sort of pigs in the ditch who are publicly traded companies. And if you scratch them pretty hard, there are some big mental health companies either out there or buried within them. Teladoc's obviously a good example here, who are trading at valuations rather below the quoted private valuations of many of the companies that you've been invested in. So given that my understanding is that at some point you guys want your money back, well, maybe not, maybe it's just a charitable effort you guys are all doing now, and we're in the post-venture phase, but if that's the case, how do we get to the point where we get some of these companies who've been around a while, and we now have Armada and Hinge who are, well, Hinge isn't that old, but Armada is 14 years into the making now. Not a mental health company, but a couple of big mental health companies, a lot of funding, not that much younger, right? So how do we get past this? How do we get them out? And how do we deal with the fact that, the digital health sector, essentially publicly traded, sucks? You look keen, Jenna, so dive in.
The market is up today. Well, I actually don't know where it is as of end of day.
Is Teladoc back at 300? I might have missed that one.
I think there are a lot of late-stage companies that are, great businesses, profitable, still growing really well in large markets run by great teams. And the market has been closed to IPO. And I think we're seeing some of that change, like even with the Waystar IPO most recently. Obviously, this isn't specific to care delivery, but I think that's that makes me optimistic that some of these companies that have been sort of waiting on the sidelines for the market dynamics to change can go public in sort of short order.
I agree. I think we're all lucky to have very patient capital LP bases of university endowments who, of course, want their money returned at some point, but IPO
do they need it back? I'm not sure Harvard needs it back anytime soon, but
IPO markets open, they close, they will open again. And not every company needs to be a company in the public markets. There are great private homes for many mental health companies. There will be consolidation. And so I'm super optimistic on that front. And I think part of what makes our category tough, or part of what we're all healthcare focused investors who only invest in the category, and there was kind of a wave of kind of tech investors who came to invest in digital health during COVID and then got scared and ran away. And part of what makes people scared is they say there aren't any great comps. We're trying to underwrite this company and understand what it could be one day, and we look to the public markets and there aren't great examples. I think we're going to see that change soon as IPO markets reopen, and I think not to be like a VC that talks about AI on stage, but I'm going to go there for a second because I do think it's going to fix a little bit of our issues today, and that today we have services companies, tech-enabled service companies that have low margins and therefore don't trade particularly well. Or we have software companies that have good margins, but have grown very slowly because no one in healthcare has IT budget, and selling into any healthcare entity as software is very hard. And I think generative AI starts to solve two of those problems. One is it improves the margins of these tech-enabled services companies that can use these AI agents to do all this back office automation and just kind of get a boost in efficiency. And then on the software side, we're seeing all these companies who no longer have to trade as software. They're selling AI labor, and it's working. They're saying you don't have to change anything about your system. We're going to give you an AI human that is cheerful, fast, efficient, relatively low cost, and they're tapping into labor budgets, which is dramatically improving go-to-market and speed. So I think with AI, we have a boost to both categories of companies, which will improve market conditions in general.
So the translation there is that, health plans and hospitals are used to overspending on their labor budget, and if you can convince them this thing is labor, not software, it's all good.
Yeah, it feels like a little gimmicky in a sense, because this probably all reverts to some API usage model. But for now, companies are charging hourly wages for AI workers, and they're seeing pretty fast go-to-markets with that strategy.
All right.
I wanted to touch on that one piece too. Yeah, so in some subsectors of behavioral health, it's, for lack of a better word, really bad right now. I would say, for digital therapeutics, the public comps are just horrible. They've completely fallen apart in the last few years. I think the same has been true for a lot of the, kind of psychedelic companies. You look at Compass, you look at Atai. Some of these companies are literally trading below their enterprise value, which is just unbelievable. And I think part of that is, the markets, and they go up and they go down, as Daisy was saying, and it's just a lot of it's public perception. But I also think a lot of it is just the foundations of the businesses, so many companies, based on the exuberance coming out of 2021, did not focus on unit economics or, how to build just a foundationally strong business that can withstand, downturns in the market. And I think now you're seeing that investors actually care about those things again. They want to see profits, they want to see the unit economics, they want to see that you have a real go-to-market strategy that can scale. And I think that got forgotten, for a little bit, after 2021.
I mean, a lot of those publicly traded companies I'm talking about are still not profitable, right?
Yeah.
Probably may never be because of the way
Correct.
they're behaving. So for the private ones that you're discussing that are doing well, do you see, and this is going to get to the industry question and ask you the question as well, the audience question. Do you see enough profitable companies who look like a IPO used to be back in the day when you had to have 86 quarters of profit to be able to go public, and that was a long day ago, but that used to be the trend. I mean, do you see enough in this sector that look like they could do that once the market opens?
Yeah, I do. And, for us, we're looking like, pretty early, pre-seed to Series A. But I would say this year especially, I've seen a lot of seed and Series A companies that are either profitable or almost profitable, which is, I think, really, that's pretty rare.
And they can find, at that scale, they can find non-IPO exits, right? And there are obviously PE companies who can take out the bigger ones as well. But I think that's a lot of what we're saying.
Yeah, and you're seeing a lot of consolidation. Like, there's a lot of solutions that are doing similar things or pieces of things, and you're seeing those companies kind of like merge together, acquire, however you want to say it. We've had a couple of incidents like that within our portfolio. Like we had a company, Options ND, which does AI diagnostics. They merged with Resilience Labs, which does like an actual like care provision. And so together, they're a much stronger company. I think you're starting to see more of that happen as well.
All right, now I'm going to put you on the spot. 2 years today, we're back at Salome's conference with 6,000 people in, San Diego Convention Center or whatever it is. How many IPOs in this space between now and then?
Me?
All of you, I want a number, come on.
2 years from now, you're saying?
Yeah. In the next 2 years, how many have got out?
I have no idea.
No, come on, give it
12.
12, okay.
I don't know, I was going to say 8.
8?
Are we mental health or?
No, mental health. This is not.
Oh,
This,
mental
sorry, mental health. I apologize. Not the.
Yeah, probably 3.
3?
That was my number.
3. Okay.
I think it's going to be low. I just don't think that the IPO market is the natural landing spot for a lot of these companies.
Okay.
I think it'll be low.
Well, I asked the audience, and I got 12 votes, which is good enough. Nobody said none, which is probably my number. So we're at half split between 1 to 2, and the rest are 3 to 4. So that's good. I didn't give them an option of more than 4. Maybe I should have done. Maybe it should be 8. So that's the answer. All right, fabulous. We're gonna go to audience questions now, and I was going to start with the obvious one, which you always get every venture investor, which is, what are you looking for to invest in a company? So you don't all have to say this, but it has been asked. What really excites you? When you get the email from me or somebody else and it comes in, and before you hit delete, what is it you go, okay, yes, I actually want to see this. And by the way, you should reply saying no. There's a hint for you, Julie.
Yes. For me, it comes down to a few key things. One is obviously traction. If you've been working on the business for 5 years and have like 20K ARR, it's like, I don't know that I'm going to like respond to that one, or it's going to be something that's a fit for us. But on the other side, it's like, the unit economics of the business. I know I keep coming back to that. I'm kind of obsessed with it, and like our investment committee is too, and I think for good reason. So like seeing you've actually thought through like that aspect of the business and have a strong cornerstone to build upon is really important. And then always the team, I love physician and scientist founded companies. We invest in a lot of those. And I just think you need to have that perspective when you're building in the space, whether it's the CEO or not. Somebody on the team should be able to speak to that piece of it. Outside of that, obviously looking at market, if it's something that's differentiated, if it's one of those companies with the comps that I mentioned before, it becomes a much harder conversation, but not always. Like if you can tell me why, what did you learn from the digital therapeutics companies that aren't doing well or from the psychedelics companies that aren't doing well, like that's actually pretty impressive that you saw that and you were able to take lessons from it and then build that into your business model. I think it's really good.
I'd maybe apply this not only to behavioral and mental health, but probably any category in our healthcare portfolio. But are you solving a top 3 pain point for whatever constituent you're selling into? I know I've been kind of beating a dead horse here, but to sell these or to kind of contract for these companies, it's a tremendous amount of brain damage on both sides of the house. And so for the payer or the provider, whoever you're selling to come to the table and direct those resources at the contracting, collaborate with you on implementation, all those sorts of things, it has to be a top 3 pain point. They've got people knocking on their doors all the time. So that's the first thing. And then I think the other thing is, again, just to the point, like coming out of 2021, I think there's just, how do you get to interesting gross margins? So, and I think that's again, going back to reimbursement, that's a really challenging and tricky mandate for these types of companies, because there's not a lot of upward pressure on the top line. So how do you think about kind of making this a venture backable business, given some of the kind of rigidity at the top?
So can I add something to the question? Because there's been a question we're doing something to sort of amend it slightly, which is, what about clinical evidence? And at what point do you care about that? The question is about asking about, is this from a payer who's essentially complaining that they don't get clinical evidence, they get nice to have stuff. How much validation / investigation / demanding do you guys do about the clinical evidence at what stage?
So for us, that's like a really key part of what we do. We have an amazing scientific advisory board comprised of some brilliant folks in the mental health space that evaluate everything. And we don't do any deal that doesn't have really strong clinical evidence. Depending on like the stage where it's at, that can vary in terms of what that looks like. But for the deep science companies, like we would love to see like a first in human kind of trial. It's not always possible to get a company at that stage, but at least you have to have done some clinical research and have like the team in place where we're comfortable that like they understand the subject matter and they'll be able to get that clinical evidence. For the more service-based ones, if you're doing care provision, if you're doing something that's established like collaborative care or something like that, like, that the evidence is out there. So then it becomes more of an execution play. If it's something newer, like I was talking to ketamine company earlier today, and it's like, okay, well, can you prove that this is going to have like long-standing benefits for the population that you're going after? But again, like, we had an SMI clinic company that had a trial of like 12 people, and they raised a bunch of money on that, and they got a bunch of payer deals on that, and since then they've expanded out to way more than that.
I understand ketamine works very well if it's a space company or a car company, but separate. All right. Meanwhile, can I have one of the three of you who does bigger deals talk about that clinical question? What point do you start really digging in?
Yeah, I think it depends on stage. I mean, we care deeply about clinical models. We have a number of physician investors on our team. We do a lot of diligence with clinicians to make sure we feel like we're backing the right models and doing right by patients and providers and payers. It depends on the stage. We are very founder-driven investors. We frequently will back founders with nothing more than an idea. And if they are the person on this planet who we think is the most equipped person to build that company, we are very comfortable investing prior to evidence and using the seed round to generate that evidence and prove it out. I think Series A and beyond, we want clinical evidence, and that obviously the later stage you get, the more robust you want that to be. But we think it's an important factor for sure.
Let me add in one thing. I just got a question here, which I hear a lot about, which is when you say pre-seed or we'll take a founder from nothing, and I've had Julie, your colleague, tell me this. I'll take somebody in the office and I'll take them from there. And the folks at Venrock have frequently said we'll found the company and go all the way to I don't know how much devoted health is worth now, but gazillion billions allegedly. But we also, everyone in the room who's run a early stage company has had the email back saying, oh, well, yeah, I know we said we were seed or pre-seed, but really, do you have $1 million ARR and do you have 20 customers? And so, is that just an excuse? Is that just you don't like the team, you don't like the space or whatever, or is there some truth in this? Oh, I need to see $1 million in ARR before I start.
Yeah, I maybe would answer the question a little bit differently, but I think usually when, as an investor, you say something is too early, it usually is related to traction. You need to see more, maybe it's clinical evidence, you need to see maybe the company expand to a second market so you can understand go-to-market repeatability. So at the growth stage, we spend a lot of time thinking about if you've gotten to the Series B stage, you probably have clinical evidence, and you're probably in 2 markets. And so we're spending our time thinking about, okay, this clinical evidence, what does that mean from a value creation standpoint? Over time, can we find our way to maybe a case rate or a shared savings model where we can really supercharge the services model? And clinical evidence is requisite to be able to have that conversation. And then usually we're talking about, okay, what are the other markets we could go to? What payers are going to come? And that's really the underwriting thesis we apply. But the basis has to be clinical evidence to even get to the Series B stage.
All right, but going back to the question about the seed stage, I mean, I know officially you're not all seed investors, but is the you don't have $1 million in ARR, is that just the excuse? Or is it real? People come back with ARR.
I haven't seen many seed stage companies with $1 million of ARR.
I promise you I've had that email several times.
I've heard that a lot, which is, do you think we need to get to $1 million in ARR before we can go out and raise an A? I mean, I don't think there's anything like sacred about that. I think it's more along the lines of, have you proven something in this seed stage that kind of leads me to believe that whatever you say you're going to do with this Series A capital, you're going to be able to accomplish, or is some of the kind of proof points around the seed phase going to bleed into the capital that I'm giving you today? So I don't think, like I said, there's anything super, super special about that number, but it's just around kind of the significance of the next step.
All right, we're out of time, but I have one question that I'm going to answer, which is the one which is, how do we best get in touch with you? Do we need a warm intro? Do we need, I've lost it now. Do we need a warm intro? Do we need a specific email? Should I apply a form? Or should I just come mob you after the end of the session? The answer obviously is just come mob them at the end of the session. I want to thank Helen, Daisy, Jenna, and Carmine, and please give them a round of applause.